my goodness, my stock has dipped. There is no such thing as low risk, high reward. There is no such thing. You gotta remember that. Hey all, Choiboy here. Welcome to another video. So today we're going to be talking about investing in high risk stocks and crypto. Disclaimer before I start this video, I'm not a financial advisor. Please take everything I say with a grain of salt. It is purely for your entertainment and maybe part of your research, but don't rely on everything I say. I might say things that are slightly wrong. It could be infused with a bit of my own opinions and thoughts. So just take that in mind when you're watching this video. Let's get straight into it. The reason why I wanted to talk about this topic is because ever since GameStop, I guess it goes way beyond GameStop. Just in general, people have been quite interested in high risk, high reward stocks and crypto. And the problem here is that most people don't do so well when they enter this space. It's not supposed to be easy. It's not guaranteed to make you a millionaire. And for that reason, I thought I'd just go over a few things. Like for example, GameStop is like the most recent kind of thing we saw globally. Is just crazy, and most people don't even know what they were buying into when they were buying GameStop just by reading the media and stuff like that. But did they know what GameStop actually does, what their financials look like, what is the potential, why is it even going up, what is a short squeeze? Like, did anyone really understand that? I don't think a lot of people did. They just bought it because it just got crazy high potential to short squeeze, which put the stock price through the roof. I'm not saying do not invest in high risk, high reward or these kind of things like GameStop in the future, but make sure at least you know what you're risking and know all the fundamentals and all the things going around it, and make sure you're happy with taking that risk. That is my main kind of goal here. So let's go into the things that you have to keep at the back of your head every time you look into these kind of stocks and crypto. Is research before you invest. I think most people don't do this. The thing with GameStop is that people just saw it all over the news and all their friends were talking about it, their colleagues, whatever. That's dangerous because you don't know what you're putting yourself into, but also you don't know where the potential target is. You're just in it because everyone's talking about it, and it is called high risk. It comes first. Before the high reward, there is high risk. Once you get over the risk, you get the high reward. But the thing is that it's not guaranteed. So you have to research about the company, about what's going on right now. What is your short squeeze for GameStop at least? What is the upward potential? And what is the downfall? What's the risk involved? And all those kind of things you have to really know. And not only just GameStop, but crypto as well. You need to know what you're investing into and what the coin does or what that blockchain does. All those kind of things you really need to look into, because even with thorough research, you're not gonna be guaranteed a win. And that being said, the second thing is it is not a guaranteed win. You're not gonna make money regardless. This doesn't work like that. And this is where most people kind of fail in investing. They don't research enough and they think it's a guaranteed win. So they put a lot of their net worth into these things. Like for example, let's say I have a life savings of 50k, and straight up, because GameStop was all over the place and I think it's gonna go up, I chucked like 25k into it, like literally half of my life savings. Let's say you got in like when the hype was real, like $300-400, and now it's like $50. You just lost a good more than 80% of your investment like that, and it happened real quick. It's all cool and gravy, and you would have made so much money if you bought GameStop like, I don't know, $30 and it went to like $300-400. It's like a 10x, right? And if you sold it at that point, good for you, you made money. But if you're going at that all-time high, you know, there's more risk involved when you're buying it after already 10x'd. At that point, you shouldn't be expecting that much more returns. That being said, third one is only invest what you can afford to lose. That's really important. People putting in their entire life savings towards these high risk stocks and crypto is just nuts. If you're fine losing it, sure, That's really up to you. But I think most people, when they put in their life savings, they don't expect to lose it. But if they're buying something like GameStop, it's not the smartest thing to do, especially if it doesn't work out, especially if you're late to the game. When you're buying a stock or crypto after it already hyped on the media, normally it's a bit too late. The problem there is that people will start to profit take. The people who've been in the stock or crypto much earlier would start to take profit because they know this is not sustainable growth, and they'll be like, oh, it's a bit too high, I'm gonna take some money out. And a lot of people will do that, and a lot of people have different target points, and that's what creates sell walls. And you just need to know what is happening, what could happen, and expect to lose the money if it doesn't go right. You can't expect these things to go up forever. It's really important. If you are investing in a high risk, high reward stock and crypto, and let's say you chucked a decent amount of money into it, you are fine with it, you researched enough, you know you're not going to get a guaranteed win, you know that you might lose your investment. At that point, the moment you put the money in and you know everything about it, and you just see a mad potential in it, just forget about it. Just put it in and be patient. I think a lot of people might have experienced the thing where they bought something and it's so volatile and it drives them crazy, and they sell it, and normally they panic sell it when it dips a lot, and then it starts mooning after that. Like, that's very common. I think I've seen that so many times, and I've had a lot of people around me also talk about those kind of things. If you believe in something after researching about it and doing all the calculations needed, just leave it. At the end, you just want to sell it at a higher price. That's the end goal of any investment, really. You just want to make a profit. If you believe in something, you should not care about the short-term volatility, because there will be always people who bought it earlier that would profit take, while new investors come in and they buy up those profit takes, and it drives the stock price higher. It's a very common thing for things to consolidate and stabilize after a massive pump. It depends on when you bought it, right? If you bought it at the all-time high, you are probably expecting it to dip a bit before it keeps going up. It really depends on the potential of the stock and what kind of stock it is. I think the single biggest reason why people lose out on high risk, high reward is not just research, it's because they panic too much. And they're always looking at the price and like nervous about it. They're like, oh my goodness, my stock has dipped. Don't do that. Just leave it. If you believe in it, just leave it for a couple of years and you'll thank yourself. If you really see some news about it, or like some kind of media about the stock did this and it's bound to fall because it's such a bad news, then you can sell it then. If it's not news breaking, just don't touch it, really. It'll save you a lot of money. We live in an era where internet has become a very, very important part of investing. Social media and the internet has never interfered with the stock market this much until now. We live in a brand new investing era, and the fundamental strategies are slowly showing its age. We just don't know what the new fundamental is. Okay, I think investing is going to change how we invest and how we evaluate stock prices. I think a lot of that will change. If you bought something just because someone was talking about it, and let's say you did research and all that kind of stuff, and you made the decision to put your own money into it, and it falls, never comes back up, don't blame the person that you've heard from. At the end, it is all your decision to put your money into it. It is totally your responsibility. It's no one else's responsibility unless they're like a professional financial advisor or something like that. Then it becomes a separate issue. But if it's something that you read off Wall Street Bets on Reddit, then who is to blame other than you? No one. So those are the things I would kind of keep at the back of my head when I'm doing these high risk ones. Let's talk about Wall Street Bets. The amount of people that join Wall Street Bets in the past month is crazy. Like gained a good, like, I don't know, several million people over the past month. And I think a lot of Kiwis are on it as well. I just want to talk about it real quickly because it's something very dangerous. It could be a great source of information, but at the same time, first of all, take everything on there with a grain of salt. Not everyone is right on there, and they are not the holy grail of investments, okay? Just because they're saying, oh, this stock is gonna go up, does not mean it's gonna go up. But I can't smash on Wall Street bets too much. Some people put decent due diligence on there, which they call DD. It can be a good source of information and part of your research. You just need to cross-check it with your own research. When they say this A is a fact, then you got to check if that fact A is actually real by researching yourself. Wall Street bets is not your only source of research. Let's put that in there. It's really important that you cross-check all the information on Wall Street bets. And you got to know what Wall Street bets is all about. They're not about making money off any stock. They're specifically really interested in penny stocks and small caps with large growth potential. But that's the thing. Anything with a large growth potential also comes with a large risk. Nothing is easy money in investment. If you're trying to make a lot of money off a single stock, you're also taking on a lot of risk. There is no such thing as low risk, high reward. There is no such thing. You gotta remember that. This subreddit can do a lot of people good justice, but at the same time, it could wreck a lot of people as well. Let's talk about GameStop real quick. So this is my Sharesies portfolio, and I've bought GameStop a week or two ago, okay? And it wasn't that great. It was not a good decision. That's why I didn't put that much compared to the things I'm more bullish on. Obviously, BlackBerry I'm really bullish on for the next couple of years. Virgin Galactic I'm also quite bullish on for the next couple of years, and Plexure obviously as well. But GameStop has a significantly lower amount of money invested into it compared to my other investment. That's because that is the amount of risk I need to take on by buying GameStop. And I bought GameStop really late. I bought it at 90 bucks and it's like currently 50 bucks. I'm down 40 something percent. But the thing is that I didn't buy GameStop purely for the money. At this point in time, sure, another short squeeze could have happened, but it cannot. I know that. And for that reason, I've only chucked 1,000 New Zealand dollars into it, which is around 700 USD. I just wanted to help the cause. I just wanted to be part of the retail investors, which have been showing the hedge funds who's boss this time around. But I guess for all the people who've joined in GameStop after the massive pump here, they would have got slightly wrecked. People who didn't profit take at these times because like Wall Street bets was like, oh, diamond hands. Sure, okay, not selling to wreck the hedge funds is, I guess, good, but it is your money. Just because other people are pressuring you to not sell at these high prices does not give you a good reason to actually not sell. You got to set your own goals, you need to set your own targets, and you just gotta do what you gotta do. At the end, we're all in here to make some money. Losing money is not fun. Sure, I bought it because of the cause, because, you know, I bought it all the way here after it retracted quite a bit. But what was my confidence level of this going back up? It was probably lower than 50%. Just to bring in some memes into my portfolio, just to make my YouTube slightly more interesting, but it's like under 5% of my portfolio. So that was what I was comfortable with, and if I not make money off it, I'm fine with it. It's all fun and games for me, at least. But for a lot of people, no, it was not. Thirdly, crypto is another thing that people have been really interested in, especially after Tesla have announced they will be buying 1.5 billion US dollars worth of Bitcoin. And they will also be accepting Bitcoin for Tesla cars. I'm not going to go too much into detail in cryptocurrencies. I've been in cryptocurrency for a good 4 to 5 years now, and one or two things I really want to talk about is this is a very volatile space, okay? It's a dungeon, okay? You need to know how to endure volatility. If you're not good with taking dips and seeing your portfolio go up and down real quick every day, because it's a 24/7 hour market, it never stops. It's not like stocks where it has trading hours, it's always on. It's very volatile, and it's such a early stage of crypto as well. It just went over $1 trillion market cap total for cryptocurrencies altogether, but yeah, it's still a very, very volatile area. So you do need to research a lot, because even with good research, you're not guaranteed money. Once again, it's the same thing. Research is really key here. Even if it's supposed to go up, like even if all the research says, oh, this must go up because this has so good tech and so undervalued, it might not go up. It's nearly a gamble, especially if you're going for altcoins, which is all the coins except for Bitcoin is called altcoins. That's even more riskier than buying Bitcoin, because Bitcoin is always kind of like the king of crypto, because when people think about crypto, they think about Bitcoin first. They don't think about other things. Like, sure, nowadays we have people talk about Ethereum because it's been hitting like all-time highs and all that kind of stuff, but at the end, Bitcoin is kind of like the thing that is most mentioned in this space. Dogecoin was a very interesting one recently because, you know, Elon Musk and Snoop Dogg was like tweeting about it. You know, those kind of things are literally bound to be kind of like pumps and dumps. It doesn't really have a proper use case, literally a meme crypto. And for everyone who bought it at the all-time highs, man, you're in for a hell of a ride. Make sure you're fine with losing that kind of money, because it's literally a gamble. Let's keep it at that. So, what is my conclusion to all this? Do your own research and make your own decisions. Take on the risk yourself, don't blame anyone else. What else am I supposed to say? We're in a very volatile and interesting time for investing, and there's more to come, I guess. I don't think it will just end here. There will be a lot of controversial and a lot of volatile, high risk, high reward stocks in the future as well. You just gotta make sure you could get in early and stick with it if you believe in it, and make sure you have some price targets of when you'll be profit taking. That's really important for a successful investment. If you like today's video, give it a thumbs up, put a comment down below what you thought, subscribe to the channel if you haven't already, put the bell notification for my live streams where I answer your questions in live, and I'll catch you in the next video. Catch you around.